Welcome to Crypto BS. I'm Al.
And I'm Craig.
And welcome to our show. We usually have quite an in-depth discussion regarding some world news and the things that move the market, which Craig absolutely despises.
I hate it.
He hates it.
I hate everything.
I think that it plays quite a role in how the markets move. Craig disagrees, so I'll try to keep it short today. Germany has announced that it is going to nationalize Uniper, which is their gas company. This, to me, shows how much they truly fear and that they're going to be suffering over the winter. And I definitely think it's going to affect their economy. And with them being one of the larger economies in Europe, I do see that as a trickle down. Putin is drafting about 300,000 reservists. Looks like he's going to go ahead and push into the Ukraine. I don't think that'll happen before the winter time. I think that their typical range is for them to fight in the spring and in the summer after all the rain and after the thaw. So I bet he's going to train them up and then look to push in and take the Ukraine in the spring and summer of next year. Let's see what else we got. IMF is calling for some global regulatory framework. Now, Craig, we did a show not too long ago about the regulators. Do you think that is going to heavily drive the market down just because the IMF is calling for a global framework? Because you didn't like the idea of having a lot of regulation. You like the wild, wild west and the cowboyisms of the crypto market as it is now.
Well, there's two sides that you can look at. You can look at, crypto was meant to be a wild, wild west of decentralized currencies, and this is a step away from that. So that could lose some faith from existing and new investors. But on the other hand, there's a lot of what ifs, and a lot of the big players in the cryptocurrency space right now are these larger companies and banks, and some regulation may give them a little bit of trust in, if we do this, we're not going to get railed on the back end. So could be good, could be bad, yet to be determined.
And it just basically depends on what the framework is that's surrounding on whether it's going to encourage the market to grow or stifle the market.
Yeah.
Okay. Speaking of stifling the market, we do have some U.S. news on regulation, which the U.S. tends to absolutely try to crush everything. And what we've got is that the U.S. House is drafting a bill to implement a 2-year ban on algorithmic stablecoins. For those of us that were involved with the Terra Luna stablecoin that pretty much destroyed Luna and really sent the market down heavily several months ago, that's what the U.S. is drafting a bill to do. I don't have any information on whether or not that's going to get pushed through or not. Again, it's just in a draft. But I don't think that that's going to have a whole lot of impact with us because I think everybody's scared to death of the algorithmic stablecoins after the Terra Luna.
Well, how many still exist?
Well,
not
I guess,
how many. How many major ones are still existing?
Well, you still got Luna, and they've still got their stablecoin, and Tron has one as well. But I don't know that I wouldn't consider them major. But I don't know that
at this point most people are using USDC, USDT, and BUSD, Binance. That's probably the top 3.
Yeah, and I don't think anybody right now is interested in the algorithmic stablecoins anyway until there's a better idea out there than what has been taking place with the Luna. I don't want any part of it. Are you going to use it?
No. I don't think that the legislation will come out and do that much damage to the market, at least. It might be a play to short Luna.
Well, the damage to the market is going to be done because no one is going to try to progress it, I don't think. They're not going to try to work on a new algorithmic stablecoin because if it can't be used in the United States for 2 years, are you really wanting to put that much effort into it? And I guess the other side of it is, you've got 2 years to come up with a good idea.
Well, do you even need it? It's just a different type of stablecoin. You can still survive. The whole crypto market and crypto economy can still survive with a regular stablecoin, a backed stablecoin that's backed one-to-one with some sort of stable asset.
Yeah, that's yet to be seen. We'll see. I guess lastly, as far as the U.S. goes, the SEC has claimed that all ETH falls under its jurisdiction. We had some.
Who said that?
Oh, the SEC. They want everything underneath their jurisdiction. And what it comes down to is because the majority of, okay, so this goes back several years ago, and I cannot remember that guy's name. But he owns Token Metrics, and he's the one that supposedly got hacked live on air for millions of dollars. Now, there's some theory out there that it was kind of a setup, and he was doing that so that he wouldn't have to pay taxes at the time. And what the SEC is saying is that because the majority of the ETH miners were in the U.S., like 40% of them at the time, then the ETH mined and the ETH control, anything that happens to do with the ETH falls into the U.S. jurisdiction.
So what does that mean for ETH?
I don't know, but that definitely worries me on, if if the SEC comes out and says, hey, ETH is a security. I think that could definitely drive the market down on ETH. I don't think it's going to change a whole lot. And if we looked at how Vitalik originally went through and drummed up business for ETH and got the investors for ETH, no doubt it was a security. Zero doubt. Whereas Ripple didn't necessarily follow exactly the same way, yet it still got tagged with it. But the way that he marketed it, people were expecting to get a return on their investment. Definition of a security. And there's no doubt. Video is all over the net about that if you're interested in it. Type in Vitalik, security, Ethereum, it'll come up. Anyways, it's definitely a possibility. I don't know. It makes me nervous a little bit more with ETH going forward in the SEC in that sense, as far as taking a long on it or doing any heavy margins with it in the long sense. I don't mind shorting it right now because I'd be on the good end of it if it did pull back. And I don't mind putting some in on spot, but it makes me a little bit nervous going forward with that. Lastly, today's the Cardano upgrade for the Vassal hard fork. You care about that at all, or are you good to go?
Nothing. So much.
Don't even care. Didn't see a big run up really with Cardano prior to this due to the hard fork coming. And with that, maybe we won't see that big of a pullback after it hits. It's supposed to hit today. It hasn't hit as of this time. So hopefully everything goes well and it's going to be ready to go. But let's go ahead and move on to our rules. This is our rules segment we've been discussing over the last three shows. We've looked at being patient, having a plan, scaling in and scaling out, and we are now on to rule number 4, which is know your patterns. Coming up, we still have check your chart, RSI before you buy, when the pattern breaks, execute, and lastly, know your limits. But again, today we're looking at knowing your patterns. Craig, what is your favorite pattern that you use?
My favorite pattern, I don't know that I have a favorite pattern, but I'd say the more common pattern that I come across are simple channels. Whether they're lateral, rising channel, falling channel, it's a defined space with a more or less fixed width between the highs and lows with the parallel lines of it touching top, touching bottom, and then we're waiting for one of those two limits to break, whether it breaks up, retests, and goes to the upside, or breaks down, retests, and goes to the downside. Especially in a more lateral market like we've seen up until, let's say, this week probably. We've been seeing a lot of channels, and those channels help you make decisions on if you think it's going to be going up or down, and it kind of gives you a good buy point too if you just want to play the channel of I'm going to buy when it's in the bottom of the channel and I'll sell it when it's at the top of the channel.
Yeah, so for me, I like the double tops and the double bottoms. That for me is telling me when I'm going to go in and short, and then also when I'm going to go long on the double bottoms. That's basically when it hits the resistance twice. Also, obviously, I like that confirmation, and that's for me what I look for. But regardless of what pattern you're looking at, where you're looking at the bullish ascending triangle or a bearish descending triangle, the cup and handles, the head and shoulders, those are the major ones that are in there. For me, what I find most interesting or the hardest part to gauge is what time frame to use. What is your time frame of choice?
When I'm looking at patterns, for me, I like to use longer term time frames. So 8 hours, 1 day, maybe even 4 hours. I don't like the very short time frames, like the 5 minute, the 15 minute, because everything just gets broken by 1 hour of good news. And then in that hour, everything that you thought you knew has just gone out the window. Whereas back on the 1 day, you get a good day and it can still stay within your range because there's a lot more time frame and a lot more movement to help balance that out.
Part of this also depends on what your intent of your trade is, on if it's how short of a trade you're looking to make with what you're looking at. Right? If you're looking at the 4-hour chart, I'm assuming that you're thinking it's going to be a shorter trade.
Yeah, I mean, I wouldn't be using 4, 8, or 1 day charts if I'm trying to day trade. It makes no sense to use the 1 day chart on day trading because you don't even see the movement. You see one candle for the day. But I don't respect the patterns as much on, say, a 1 minute chart because it's just so volatile. The pattern that you see developing breaks in a minute, in 3 minutes. Whereas, if I'm looking at, even in a day trade, maybe 1 hour charts, I can see something, some play, some less volatility to make decisions. 1 and 5s just aren't my thing.
So I like the 15-minute, the 1 hour, and the 4-hour charts because I like those shorter term trades. And for me, those are what I'm looking for as my entries over for a day or 2 day trade at the max. I don't want anything that's going to be too long. Like you were saying, if you're looking at the 1 day, it's not going to do me any good if I'm going to try to get in and get out in the same day. However, for me, especially on the DCA part of it that you and I have discussed on when we're wanting to get in, you're okay DCAing right now. I am ready to wait until it gets a little bit lower, but that's for me because I'm looking at the 1 day and the 1 week chart and waiting for it to come down for me to have that double bottom confirmation of the market as a whole. So that's what I'm looking for on that bigger time frame. I'm just not as interested in it on the short term time frames. So what about the retest? You mentioned the retest earlier. How do you use those retests and what do you use them for?
So you're looking at your support and your resistance line, and then you're looking for a deviation that breaks through that pattern line, whether it's on the upside or the downside. And then you're looking for the next candle or two after that to come back down and touch that line again before reversing back into the original direction. So if we're looking at a channel that's just laterally moving, it's a very stagnant market, and we get one channel that breaks to the upside. We're looking for that to pull back down to the upper limit of that channel and then bounce back to the upside even higher. And that is a confirmation that this is pulling upwards out of the channel. Whereas you can have a candle that breaks the upper side of your channel and then just retraces back into the channel. And maybe your upper limit wasn't set properly, maybe it was just a fluke, but the retest gives you a more significant sign that this is going to the upside.
Well, a lot of times those are liquidity hunters that are out there that are trying to get the shorts or get the longs out of the market. So they're in there to try to make them get liquidated. And the fake outs that happen during that is where you get trapped and then you end up getting sucked in because you're at a higher point because you thought it was going to keep going and it doesn't. So that confirmation of it bouncing off that line, that's where I'd really rather enter instead of trying to front run it. Now, if you front run it, you can make more money, but the risk is quite a bit greater. So I like those retests also. And again, it's confirmation that you're looking at the right part when you're doing your TA. But that was it. I mean, that's our know your pattern. Craig, do you want to go in on the challenge and do a little challenge update? I know that your Ripplebot is doing pretty well.
More or less. So what we're seeing is I've been playing it pretty safe, and the market has gone down. And without me taking any advantage of the downside through the margin trading, not taking any shorts on stuff, typically you would expect that I am down right now. But thankfully, due to my bots and one small long that I hit yesterday, I am just slightly above neutral. So I am slightly above neutral in a negative market right now, and so I'm still playing upside.
Well, Ripple's moved up. There's been some good news that has come out with them on their current lawsuit with the SEC. It's looking pretty good on their part. Looks like something is going to come to an end here by October. Of course, it's looked like that for a year and a half at this point. But that news did move Ripple up. It was down to 32 cents. Now it's into the 40s, around 42 cents. And that definitely helped your bot movement, just staying in that range. Bitcoin, how's it looking? Still down on it a little bit. I know that when we looked last week, your Bitcoin bot wasn't doing quite as well because it's consistently come down well below your initial entry price with your bot.
Yeah, so the initial entry price was at 19,789, so just above 20. And then I know I got in again just below 20 because I've been saying every week Bitcoin doesn't like to be under 20. So I had re-entered under 20 maybe once or twice after that. So I'm averaging in the high 19s. We're just going to say 19.9. And with Bitcoin currently at 19, that would be about a 4.5%, almost 5% downside. But the one good thing about the bot is that the grid profit offsets some of that. And currently, my grid APR is at 20%, which isn't bad because it's slowed down a little bit. The arbitrage is, I'm trying to hit one every 1 to 2 hours. And I mean, the last couple of days it's hit quite a bit with the market moving. But before that, it had slowed down a bit. I'm hitting right now at 20%. So if Bitcoin were to fall roughly 20% over the course of a year, I would still be neutral, which is nice. The downside is this: when Bitcoin goes up, you don't participate fully in the upside. So that's what I'm trying to balance here. But with that, it has, even at this point, made up for more than half the losses that I should have on Bitcoin right now. It's made up for about 60% of them. And that's not bad. I mean, because all it takes is a good day for Bitcoin. I'm above my entry price, and now not only am I neutral or up, but then I have all this extra that my grid has done.
It sounds like the bot's working out for you.
The bot's working out for now. I mean, obviously the best play would be plays that you're doing right now with the shorts, but with the shorts comes the risk. And right now I'm not playing the risk.
Well, when I was looking at the news that was going to be coming up, the FOMC meeting, that's something that was planned out well in advance. We knew that was going to be coming out Wednesday. We just didn't know what the answer was going to be. The federal government was going to do what Chairman Powell was going to say and how the market's going to react. So for me, you're talking about the risk part of it. I'm trying to stay out of that. I didn't want to get into that because I didn't know what was going to happen. So I didn't make any trades over the weekend. I didn't make any trades going into it, but I was also out. I was sitting on the sideline with my margins, and I didn't take a short. So I kept a close eye on it. Yesterday when that meeting happened, man, it was volatile. ETH was swinging $100. It was ripping up, ripping down, ripping up, ripping down. And for me, I don't want any part of that. Now today it's down a little bit versus where it was yesterday prior to that meeting. And I think that going into the weekend, we're going to continue to see it pulling back. And I think that the key time frame to watch will be Sunday evening, that 5:30, 6 o'clock time frame when the end of the week occurs. And we'll really see what's going to happen with it going forward. Until then, I'm being careful. If I was going to do anything, I'd be looking at a short. If there looks to be a big movement coming and I'm sitting there watching, I wouldn't mind taking a quick short, just waiting for ETH to move 50 or 100 bucks and then get out of it and see if I can't squeeze out. Same thing, 50 or 100 bucks on it. But other than that, I'm being careful. I did take out a couple of DCA plays. I went ahead and added a little bit more to my Matic bags and a little bit more to my Cardona bags. So we went for 2 weeks where I had some money sitting on the sidelines from the challenge because it's only $100 a week. So I did put $100 worth into Matic and $100 worth into Cardona, and I went ahead and staked those two. Now, we've got a new $100 that just hit. Craig, are you looking at doing anything with it, or are you going to wait and see? You're going to reload into your bot? You're talking about kind of getting out of the bot going forward as we start moving a little bit closer towards the fall and the winter. What are you thinking?
I'm keeping it simple, and I'm going to be hawkeyeing those RSIs and maybe looking out for some patterns and just looking for the entry point that I feel best at. Still not looking to margin trade. But you did go in and did a quick one. I felt pretty good about one with Crow and made a small little bit on it, but that's not my focus right now. If I feel real good about something, maybe. But for the most part, I'm playing it safe. I'm looking for the good entry points, and I'm going to get in and then try to find a good time to get out.
Well, currently, after today hits, this is our week 13 of the entry. So we both have 1,300 in our challenge accounts, and I will be sitting at almost 1,900 in there. So I've done okay with it. I've got a little over 1,000 in the margin side of it, and that's what I'm using to try to make a little bit of extra money with it. And I'm going to reload that and top off some of those bags in that top 10 time frame or top 10 crypto market. So those ones I'm looking at again: Cardona, Matic, maybe get into some AVAX, maybe get a small bag of ETH if ETH has a pullback. I am looking for it to drop below that 1250 mark. That's kind of what I've been looking at as on my private accounts, and what I have set as some spot buys or limit buys with spot money. Go ahead and buy into it. And if it runs back up, I'll let it go. If not, I'm good with buying a half of ETH or an ETH and letting that ride out. I think that, $1,450, $1,480 is not that bad. I do have my next one set at $1,425. So if it pulls back down to that $1,425 mark, I'll go ahead and reload. And then if it runs back up to $1,300, I'll sell out of it and take a little bit of profit with it. But again, that's on the private side. I guess, I don't know. I'm good with what Cardona that I have currently, and I may look into adding some Link, some ApeCoin. That's another one that I'm interested in, because again, I can take that Ape and get, I think, around 6% on it if I stake it. So the profit that I'm making on the margin trading, I want to try to keep those about even if I can, and then go ahead and stake it, because that's how I'm going to earn my extra, kind of how Craig is using the bot. But I am interested in using that bot a little bit later in the year. So, well, Craig, that's all I got for today. How are you looking?
Feeling good.
All right. Well, let's go. We'll see you guys next week. This is Crypto BS. I'm Al.
And I'm Craig.
Signing off.